Good evening, everybody. Tonight, I wanted to talk about how the Rockefellers leverage life insurance to further grow and protect their wealth. But today, I didn't just want to talk about this. Y'all know I'm a former life insurance agent, former financial planner, but I wanted to get the expert. Y'all know I mainly focus on tax these days. I wanted to get an expert. So I wanted to bring on Acquania Escarne. I hope I didn't mess her name up. Excuse me, y'all. It's been a long week, snow days and everything. But I wanted to bring a life insurance agent and expert on to actually talk about this issue because y'all know I get clips all the time and people want me to review stuff and I can review it all. I can touch on it all, but I'm getting older, right? So I want to make sure I'm staying sharp and bringing y'all the best possible expertise possible on these subject matters. All right. But without further ado, here's Acquania. Hey,
Hey,
lady. How are you?
hey everybody, how you doing? I'm so excited to be here tonight because I could talk about life insurance all day, every day. But yes, you said my name right. I'm Acquania Escarne, the creator and founder of The Purpose of Money, a platform where I teach you how to build wealth through life insurance and investing in real estate.
There we go. There we go. And listen, y'all, if you are brand new here and don't know what you're watching, I'm Kamari Ellis. This is the Finance Rebel Show. I tend to pop in from time to time on these social media webs trying to bring you education about financial things to help you demystify a lot of the clutter and nonsense that are floating around out here in these cyberspaces. But again, somebody sent me a clip about life insurance, about the Rockefellers, about the Vanderbilts. And I was like, okay, another thing for me to review. But let me get Acquania on so we can talk about this. So I want to run this clip real quick. We'll talk about it. We'll probably play it again, but I at least want to do a good, thorough walkthrough of this. And Acquania will give her expert opinion on all of this.
Let's get it.
Here we go.
Rockefellers are one of the most powerful, richest, elite families in the world. John D. Rockefeller was the guy who really blew up the entire oil industry in America. And what they do, and the reason why they're still one of the wealthiest and most powerful families on the planet 7 generations later, is because of something called the Rockefeller waterfall method. The Vanderbilts were just as powerful and actually had more money than them. They blew all of their money by the 4th generation. The Vanderbilts literally are not even part of the conversation anymore. What is the waterfall method? The waterfall method is every single individual of the Rockefeller family got a very large life insurance policy put on them. The beneficiaries of those life insurance policies always tied back to the trust. And then inside of the trust was a cash value life insurance policy, which is used as the family bank. Now the family bank is inside the trust, so it acts as like a family vault. Now all the family members can take loans from the cash value life insurance throughout their whole life, and with every single generation, the family trust just keeps getting poured in with more and more and more and more money, therefore making the family richer and more powerful, therefore creating generational wealth.
This is legit. It's ever verified. But the concept here is...
It's definitely legit. Right? It's definitely legit. There is one thing that he left out because, like I said, I'm a former life insurance agent. I've had to study all this stuff before. He left out a soft skill. He left out a major soft skill that the Rockefellers did that the Vanderbilts did not do. They met more often than the Vanderbilts did. They met at least once a year as a family. The Vanderbilts went maybe, I think, 10 years or more, 20 years or more without meeting. And so it was that relationship, that familial relationship that they kept going. Y'all probably heard this term before. You probably heard me say it. Your network is your net worth.
Mm-hmm.
Well, that extends to your family as well, right?
Mm-hmm.
Your family is your first network. And so if you're not keeping those relationships intact, all of this other money, technical, insurance stuff, it don't matter. But that's all I had to say. Acquania, what did you think about that?
So I love it. I have talked about this in my community, the importance of life insurance and how it can be used to build wealth and create a bank for your family. But I'm also very transparent in that the insurance required to do the strategy is permanent insurance. It costs way more than term insurance. And for some people who have no insurance, the first thing we want to focus on is getting you insurance. And sometimes term is the best bang for your buck if you need a lot of insurance and you have a smaller budget. So whenever someone comes to me and says, I saw a clip on social and I want to do this strategy, we still go back to the basics. Like, how much insurance do you actually need? What's your budget? And what are your goals of the policy? And then we put together a plan because
Well, hold on, don't go too far. Don't go too
no,
far.
no, I was just gonna say because people get all excited about this strategy, but they don't understand it takes money to do it.
And so I just had to do this because I appreciate you telling the truth right from the gate. You're not here to sell, you're here to educate. And a lot of times we get that confused. You'll be like, yeah, we got to get some IUL. The IUL is better than the 401k or some whole life. And it's like, wait a minute, pump your brakes. Most of these people, well, not most, a lot of our people in our community, in the Black community, don't have adequate coverage or have coverage at all, don't know what they have, don't know what they're paying for. And it creates a lot of confusion. So I appreciate you for that. Thank you.
You're welcome. Yeah, education first. And let's focus on getting insurance. And then, we can implement strategies. So, one thing I will say is, though, even if you have a tight budget, it doesn't mean you can't plan for this
Correct.
strategy, right? You can get a term policy that is convertible in the future. And when you have more cash flow and you're ready to convert it, you can do that. But in the meantime, God forbid something happens to you, your family still gets a check. And, I actually have an experience like that where a young client recently, he had only had his policy 4 years and he was in his 30s when he was killed in a homicide, a shooting in a club. And that was a game changer for his family. But the difference is, he had the mindset, I want to turn this into a cash value policy one day. And we were talking about that. And as his agent, we would talk about his situation annually. And so we were at the top. I was at the top of his mind every year when he was ready to make that transition. But then, we were also still looking at the budget and how much he needed. And at the time, he still needed a lot of insurance at the lowest cost. So that's what we kept. But it still changed his family's life. And so I think even though this clip focuses on cash value policies and getting those types of policies to fund the trust, you can fund the trust with term, right? But you're funding it in the event of your death. That's just what it comes down to. And that happens. It's not often, but that happens, right? People die with term policies and they do get paid out. It's just not a lot of people.
Now, I want to say this, or I want to ask you this. Which policy puts more money in your pocket? Is it a term policy?
As an agent?
As an agent, which one puts more money in your pocket?
The one that has the higher premium, but that could be either one of them, right? Because life insurance is based on someone's age, someone's health, and someone's background. And the price that you pay for your policy is based on those factors. Now, obviously, term is cheaper than permanent. So you can get $1 million term policy for a perfectly healthy 25-year-old for pennies on a dollar, like $25, $30 a month sometimes, depending on your health, your state, your situation. But that same $1 million policy for a 50-year-old is going to be a couple hundreds of dollars, right? Because now you are closer to death. You're 50, that person's 25, and you might have a couple of health issues. So for your $1 million policy, you're going to pay more for it. Now, if you wanted $1 million policy at 25 and it's a permanent life insurance policy, it is going to cost more than a term policy for the same amount because permanent insurance is guaranteed to be paid out. And the insurance companies are taking on that risk that they're going to pay that policy one day. So they're going to charge you more to give it to you. So my commission is based on the premium. If you're paying a higher premium, my commission is going to be based on a higher number. That's how math works. But I'm not going to push to sell you a permanent policy if you can't afford to keep it up because life insurance is a long-term game. I'm trying to be your agent for the next 20 to 30 years,
For
right?
the rest of their life.
For the rest of their life, right? And if I'm trying to be your agent for the next, 50 years or so, I need you to be able to pay that policy for the next 50 years or so. And so I want to remind people that it's not a short-term game. It's not about getting this policy you can afford today, but then the minute you have a kid, all of a sudden your budget can't support it. It's getting a policy that you can actually grow and adjust with. So I also like to teach people like, hey, let's pick something that is adjustable if it needs to be, that's affordable when you need it to be, and covers your needs.
Well, I mean, I asked you that question because, I've been in and around in life insurance for a long time, and there are some people who don't want to sell term, even though, like you said, as long as the premium's high, they'll get paid more.
Mm-hmm.
People agents tend to like to sell more permanent life insurance, whether it be an index universal life policy, whole life policy, variable universal life policy. I asked Acquania that because, again, this is all about education. Y'all know the show is all about education. So I want y'all to know where the incentives lies. And if people lie to you, then you should know. Because, again, I'm all for people making money, but do it ethically. And ethically means you didn't lie about it.
Right.
So, yes. Yes.
And I'd also tell people I'm a what we call independent agent, right? I don't work for one company. I'm appointed to multiple companies. I can shop around policies. So I appreciate being able to be upfront about that too. Like, we can shop this policy around. My commission, however, is equal for every company. So I'm not going to recommend, I in particular am not going to recommend one company over another company because I make more, because at the end of the day, my commission percentage is the same across the board. So what I normally tend to do is start out with, what do you need? How much do you need? And what are your health issues? Because I do have companies that are very strict about health criteria, and they will not take you if you smoke weed. They will not take you if you have blood pressure medication or whatever it may be. But I have others who are like, look, you want to smoke weed 2 to 3 times a day? I got you. You want to do, but you need to just let us know. So honesty on both sides is key when it comes to insurance.
Thank you for that. Now, do you think, well, let's replay that one more time. And I know I've got limited time with you today, so I'm going to get you out of here. But I want to play this, and then we can stop it as we go through some of the concepts.
Okay, let's do it.
Oops. The Rockefellers are one of the most powerful, richest, elite families in the world. John D. Rockefeller was the guy who really blew up the entire oil industry in America. And
kind of stole the oil industry, but that's a whole other thing.
And what they do.
Listen, I like to give it to them real.
And the reason why they're still one of the wealthiest and most powerful families on the planet 7 generations later is because of something called the Rockefeller waterfall method.
That's true.
The Vanderbilts were just as powerful and actually had more money than them. They blew all of their money by the 4th generation. The Vanderbilts literally are not even part of the conversation anymore. What is the waterfall method? The waterfall method is every single individual of the Rockefeller family got a very large life insurance policy put on them. The beneficiaries of those life insurance policies always tied back to the trust. And then inside of the trust was a cash value life insurance policy, which is used as the family bank. Now,
and they probably had multiple life insurance policies. It wasn't just one.
Right.
And like I said before, it wasn't just the money why they were able to amass and obtain and keep so much money. It was really the relationships. And I love life insurance. I tell you all the time, I think life insurance is probably the best financial instrument ever created. I know Bitcoin is doing their thing right now, but historically speaking, my money is on life insurance. My money's on life insurance.
Yeah, because honestly, sometimes I laugh when people say, why does this make sense for the insurance companies? I pay them $25 a month and they give me $1 million policy. If I die after the first payment, they got $25. My family gets $1 million. Like, that math doesn't make sense. And I'm like, listen,
the math ain't mathing.
The math ain't mathing, but they've done it long enough to know that statistically for term, they're not going to pay it out, because most people who are young and healthy when they get the policy will live beyond the term of the policy. Only 1 to 2% of term policies actually get paid out. But when they do get paid out, that ROI is priceless, because you're replacing your income, you're paying off your debt, you're helping your family continue to survive without you. So I would still choose life insurance over not having it at all.
Correct.
So I think that's true. But the thing that they're also highlighting is cash value. So cash value is only built up in a permanent life insurance policy. And that comes because every time you make a premium payment, a portion of your payment is going to go to the cost of life insurance, and the rest is going to go to that cash bucket that after your first year, you'll get an interest or a dividend payment. And then for most companies, every quarter after that, you could potentially be paid more. But that's really only if the life insurance company is profitable and has dividends or profits to share. If they have a bad year like 2008 and they lose money, your cash value doesn't go down because they don't take from that, but you might not earn your dividend that year, or you might not earn your interest that quarter because they don't have any money to pay, right? But statistically, because they are investing a lot of their money in the stock market, they're getting returns over a 10-year period that allows them to pay out most years. And that's where that cash builds up, and builds up. And that's where the family is leveraging cash in the policies to do the loans, to buy the businesses, to go to college, and whatever else they want to use that cash value for. So that's how they're leveraging cash inside policies to benefit the future, because they're taking that money and they're investing it in avenues that yield more fruit. You educate someone, they get a college education, they get a good job, or they start a new business, that makes more money for the family in the future, right? You use this cash value to cover someone's business getting started rather than them having to go to banks and to get denied for capital. They create a multi-million-dollar business. That's more business for the family, right? So that's how they're like bringing it full circle. And then you still have the ultimate part where it's still a life insurance product. So when that person eventually dies, that money is still going back into that family bank to fund the next business, the next book, the next whatever,
college, whatever.
Right. So that's what makes it crazy, compound crazy, but it's totally genius.
Okay, let's get to the rest of this.
All right, let's go.
The family bank is inside the trust.
Oops.
Mm-hmm.
Cash value life insurance policy, which is used as the family bank. Now, the family bank is inside the trust, so it acts as like a family vault. Now, all the family members can take loans from the cash value life insurance throughout their whole life, and with every single generation, the family trust just keeps getting poured in with more and more and more and more money, therefore making the family richer and more powerful, therefore creating generational wealth.
This is legit. It's ever verified. But the concept here is...
So, again, that it is legit, right? We don't need him to tell us that, but it is legit. Like Acquania said earlier on, it can be a bit more complex because you need lawyers involved. You need to be able to fund this thing. And there is some ongoing paperwork you need to do, like taxes a lot of times. Now, everybody I know is trust crazy right now. And I need to tell some of y'all to pump y'all brakes. I need some of y'all people who's going crazy about setting up a trust is, listen, I need y'all to set up y'all cash flow, whatever it's your cash cow, your cash business, your cash buckets. You need cash coming in somehow, some kind of way, consistently. So master that first, then we can talk about the trust later.
Facts. I do, but this is where I go back to life insurance, estate planning should be a part of an overall financial plan.
Hold on. I totally agree.
It shouldn't be done in silos and silence, right? It should be a comprehensive plan that you talk out with your money team. You pick the experts. I don't tell people how to do estate planning. I hired an estate attorney. If I hired an estate attorney, I think you should hire one too, right? That's just my thoughts.
So that means you got to spend some money and you can't get it for free.
Well, listen. Oh, but wait, there's more. So when my husband and I did our estate planning, he had a benefit through his job where he was paying like $10 a paycheck for legal services. That I said, babe, look into that. What does that cover? Who are their recommended attorneys who accept these legal services?
Correct.
We went to a qualified attorney on their list for our state. They did our will, medical directives, power of attorneys for free. We just had to pay for our special needs trust for our special needs son. So if you are a mommy of a special needs kiddo like me, you may need to get a special needs trust set up to protect that child's future so that they can still qualify for any services or income that they need. And you still want to also leave them something just in case that service money isn't enough. So we did have to create a special needs trust, and we had to pay for that because that wasn't on the list of free items that were covered under his employee legal plan. But that's how we got thousands of dollars of estate planning done for a fraction of the cost. So look at your benefits at your employer and see if you can potentially get your estate planning done at a deep discount.
Great. Now, I have a favor to ask.
Yes.
Put you on the spot. We have a lot of people in our community, the Black community, who need to understand special needs trust.
Mm-hmm.
Nobody's talking about it, though. Nobody's talking about it. So I'm inviting you back if you got time for me.
Oh, yes, of course.
We can come back and talk about that.
Yes, I would love to come back. We can talk about it. We can talk about anything you want: life insurance, special needs, kids, mom, entrepreneurship, life. Like,
you want to talk about what you're working on right now?
Oh, yes. Right now, I am acquiring a hotel in Lake Charles, Louisiana. And I am raising $3.5 million to do it. So if you are even curious about hotel ownership, check me out on Instagram at The Purpose of Money. And let's do a convo about it, because I'm doing all the talks, hosting all the webinars to educate you about hotel ownership and how you can get in on this deal.
Now, I know there was one question, and we'll let you get out of here. There was one, but it's two questions. All right.
Go ahead.
So, Robert Lewis, shout out to Robert Lewis. Rob, I can't think of your tag, but that's my man, Robert Lewis. He's a mortgage broker out of Texas doing this thing. He says, what percentage of your take-home pay should someone allocate towards insurance? Moreover, that's his favorite word, by the way. Moreover, how much should I have in savings before considering a whole life policy?
So I'm going to answer the second question first, because regardless of if you get permanent insurance or not, you need savings, and you need 3 to 6 months savings for most people. So 3 to 6 months of whatever you spend monthly on your expenses should be saved in a bank account, easily accessible. Anything above that, that's where I start investing more. And those are my savings, but they're money that I might have to liquidate or cash in or have to wait to access. So 3 to 6 months. However, if you're a full-time entrepreneur and your business has a very fluctuating income, you may want a year's worth of savings. But I tell people that takes time, and you might have to take years to get up to those numbers. And while you're doing that, you should not delay getting insurance. So get the insurance at the lowest cost that you can afford. And then when you have excess cash flow, then you can convert your term policy into a permanent one or pursue permanent insurance at that time. What percentage of your take-home pay should you allocate towards insurance? Honestly, it depends on your budget, but I would never allocate more than you can afford. And I don't want you to be in a position where you have to decide, do I eat or do I pay my life insurance? So I would say,
That's
like,
real.
let's focus on what the budget looks like, and make sure that after you are saving for emergencies, saving for retirement, and paying your bills, that you still have money for life insurance. So it depends, because the cost could vary. If you get it in your 20s, it's probably going to be 2% of your take-home pay. But if you wait until you're 50 and you have health issues, your insurance might be 5% of your take-home pay. So it just depends.
Well said.
Mm-hmm.
All right, Robert Lewis again says, is a retirement premium policy a good idea? Lastly, what are your thoughts on final expense insurance?
Oh, I love these questions. So the first one, I would say the return of premium policies, I don't sell those. It's hard to say. For some people, it's attractive to know, like, hey, I might get all my money back for this. But I just find it to be more useful to kind of go with something that's the lowest cost possible and the biggest reward, because even with the return of premium, you're paying a little more than you would for a regular term policy. The other part about final expenses, it depends. If you are someone who's trying to get coverage on your parents because they didn't get insurance when they were young and healthy, and you really just need enough for burial, those could be really cost effective and make sense. Okay. But if you are like thinking about a final expenses insurance policy and you're in your 30s, which they normally don't even sell it, you have to be 50 to 80. Sometimes it's not the best idea. It makes more sense to get a regular contract, like with more benefits. So I think it depends on where you are in your journey. But I've definitely helped people get it for their parents when the parents didn't do the planning and the child is going to be responsible for the cost. And they expect to reasonably pay for the funeral with the amount they're getting. So a $20,000 to $25,000 policy is more than enough. They're not trying to do frills. They're not trying to leave money to grandchildren. That's when it makes sense. But it is going to cost more than if they had gotten insurance while they were young and healthy.
Excellent. Yes, I'm actually thinking about one of those, not for me, but one of my parents. So I think it's definitely something you can be investigated in. And again, if you have health issues and you didn't get it when you're younger, you might want to think about it as you get older, or you might want to save pretty.
Yes, pretty aggressively.
Yes.
I like this other question about the ABLE account.
I got you.
ABLE. But yes, ABLE accounts are great ways to save for special needs kids. The money can go towards.
Hold on, let's read it out because I want to make sure everybody understands.
Everybody can hear it. Okay.
And for the audio podcast as well.
Okay.
Well, if you put money in the ABLE account, you can save money for the fees to set up the special needs trust and get the state tax deduction.
Facts. So you do get to write off a certain percentage of your ABLE contributions each year off your taxes. How much you get to write off depends on your state and what they allow. In my state, it's up to $2,000 per year, and anything over that, you get to roll over to the next year. So you can just keep doing it and keep getting that tax deduction. ABLE accounts are, for those who don't know, they are accounts for special needs individuals who will potentially need money in the future for medical expenses and or for their future. So when you're putting the money in an ABLE account, it is not exclusively for their housing or their living expenses. It can also cover their medical expenses. And you can heavily fund those if you like. There are limits in your states per year and the total, but they're great investment. I have an ABLE account for my son, and I definitely use it around holiday season as a way to get grandparents and other family members to invest in his future.
That's a wonderful idea. You're a genius out here. Well, Acquania, I don't want to take up too much of your time. I appreciate the time you have allocated for us today.
All right. Thank you for having me.
The community as well, I'm sure they're thankful also, but I can't wait to have you back. Again, where can they find you on Instagram?
Check me out at thepurposeofmoney.com or on Instagram at thepurposeofmoney.
All righty. Well, thank you, everybody. Next time for the Finance Rebel Show, I'm Kamari Ellis, and I will see you soon. Enjoy your weekend.
Bye.